Hello. We'll get this thing. I'm going to do a recording right now and just kind of wait for people to come in. Now, just wait a little bit. But welcome to the room. Say hi. Say hello. We're going to learn a strategy, and we're going to learn a lot more coming up. This is a moving average strategy. So I hope you have your charts set up. We're going to give it a little bit more time. We've got to have some people show up. Got me some good coffee. Ready? I don't like old sneaky snake. I don't like old sneaky snake. We're going to just kind of run a short little video. People show up. We'll go ahead and move on from there. This is a real cool strategy that's been working pretty well. So we're going to go ahead and start it off right here. Now remember, this is just a little recording I did before the thing started. So, I want to talk about a trade that I've come up with in the last 2 or 3 weeks. I have 17 years experience, and I'm starting to think that I want to start to develop different trading strategies. So about 3 weeks ago, I finally got off the couch and decided I wanted to try to find a good way to catch knives. And I put out this lesson on knife catching a couple of weeks ago when we had the crash. And when I was doing that, I kind of noticed something that was, and I've been watching these averages for a long time, and they're going to be it's going to be a strategy that you can take on just one stock, maybe, or a watch list of 10 that are very talented stocks that have a lot of volume, a lot of popularity, a lot of money flow that go into them, ones that are constantly moving back and forth and has a little bit of volatility. I think that volatility is very handy in a trade like this. So this is what I call the sneaky snake, and we're going to go ahead and we're going to kind of just look at it a little bit, but I'm going to do a seminar today right around 2 Eastern time, and we're going to go into the long parts of it, and that's going to be the sneaky snake. I got this concept because it seemed like it kind of sneaks around and then finally pops up at you. And I used to remember an old song back when I was a little child, old Sneaky Snake by Tom T. Hall, that I'd listen to, and I just loved that song. And every time it just put me in a cheerful mood, and I think that's what you need to be in here when you're trading this trade. So there's many ways of using this this strategy. You got to have a pattern. You need a pattern to form. Step one, it needs to have a pattern. In this case, this was a knife catch. You know, it could be a triple bottom. It could be 3 black crows. It could be something that, a big engulfing candle. You know, we've seen it all the time. It could be the 3-day rule of a sell-off like we see in Apple and Amazon and all these other stocks. So you need to have some kind of pattern. If it's a downtrend for 3 days, three black crows, maybe a double bottom, a triple bottom, some kind of reversal pattern. But it needs to be a pattern, and it needs to have a trend. So first example is number one, the trend. The pattern was the knife. The next, you need to have these EMAs set up. You need to have the 9. I don't have the 9 on here, so I'm going to have to fix that. But the 9 EMA and the 21. And then you got to have also the 50 and the 200 SMA. So you got the 9 EMA, the 21 SMA, the 50 SMA, and the 200 SMA. And that's what you need. So you get the 9 after the knife catch, and you break out of a trend. You break out of a trend, or you see a triple bottom and you start to see that curve up, and you see that 9 breaking over that 21. That's the time to maybe take the entry. And then you'll start seeing some positive volume come in. When the 9 and the 21 cross the 50, that's when you know you're good in the trade. So you might pull back to the 50, you might find a support from a previous high, so keep that in mind. When you're in that trade, try to find you that next support level and draw a trend line across and try to hold that support. Keep your eye on the trade. Once the trade creates a golden cross, step number 3, or step 2 is the breaking out of the 9. Step 3 is the continuation. That means the continuation, if you go ahead and you get a golden cross and the 50 crosses the 200, you can continue it for the exit that you'd want to take. So always have an exit in mind. This was a double top exit that you could have took. So that's part of the plan. We're going to talk about it a little bit this afternoon. I wish you all the best. I called a great trade on Tesla last week, the triple bottom, same kind of play. On the daily, it really was impressive on that knife catch. I mean, this was 3 black crows right here. You had the same kind of reversal, same thing. Same thing happened. If it didn't break that 50, it was time to get out of the trade. You know, when you get up to resistance in the Darvas box, you're out of the trade. So you got to find that resistance. This was the Darvas box. That was my exit idea. Now we're building up upon it on Tuesday's trade on that knife. So yeah, keep it in mind. It's a great trade, and I'll be going over we're going to go over a watch list, and I'm going to hand that out here later that could help you out in the trade. I wish everybody a great day, and we'll see you at 2 o'clock Eastern Time live on YouTube. The link will be posted down below this. All right. Well, that's that. That's part of the sneaky trade idea, and we're going to kind of go through different scenarios. I want to put my mug up here so you can see that. First a little bit about me, the ones that are new to the room in here. Been trading stocks for over 17 years, full-time every day behind this desk. I was a custom picture framer for 18 years. I got an associate's degree. I was got expelled from high school for bringing a keg to the 3rd floor John right before graduation, so I had to go back the next year for a couple months, and I decided to go ahead and get my GED, and then I did a little bit of traveling. I played music in bands, and then I started getting into the picture framing business, and I owned a picture frame shop in Sedalia, Missouri called Picture Frames Plus. I went to college there. Kind of turned my life around. I was a rugrat when I was young and partier, and that wasn't taking me nowhere, and I was watching all my friends go to jail and get busted and stuff, so I decided to hang that up. I dislocated a lot of people that I thought had to weed them all out, and then I decided to go to school, and I traveled around, ended up owning a picture frame shop. Now I own a janitorial business. I work at nights. I've had that. Was my decision to go ahead and start trading. I had to find a night job, so I bought a janitorial business. Now, I've been in a lot of chat rooms. I was probably one of the first ones to ever create a chat room back in 2006. And that was when the internet was really starting to get, out there, and everything was all new, it was all fresh. And now you got all these chat rooms and now you got Zoom and you got all this other stuff that's coming into the scene. So the thing evolves, and that's my life story. Now we're going to go ahead and start looking at some of this concept that I picked up. I think it can be also used next month's lesson for me, case study. I'm going to try to take this same philosophy and turn it into a longer 3-month swing trade. And I've been able to do that with a couple stocks. What you need charted out is the moving averages. What I have here is a TTM setup. If you have TOS or you have a way to use the TTM trend, that's the way I do it. I just like it because it's colorful and I like to paint, and it just kind of helps me out divide the momentum, the trend, which way the stock might be heading. I do have a link down there in the content that does have this chart on there. This is also a Fibonacci auto setup chart. So it's a one of a kind. If you have TOS, you might want to go ahead and download that. I've noticed, we're going to go ahead and talk about a couple trades that we made last week. Let's leave Bind up here, because I've got a watch list that I've created. I've kind of created a watch list to let you all kind of see how we can find trades. Or I'm going to take a couple trades from you all, and you're going to give me, and we can kind of look for them and see what we find. So the concept of the sneaky snake trade is a chart pattern. I'm far from a fundamental trader. I'm all about the charts. I'm all about the price and the action of the stock. I think that's all I need to know to have this trading strategy. Now, if you can build upon a little bit of this strategy and add it to yours, or even change yours around and create a new chart, and check this concept out, see how it works. The moving averages are like a gift to you. They tell you a story. I'm going to go ahead and pull up, let's say, Tesla. I really loved how I called this trade out last week. I did a video on it previously. If you can go back and watch it, it's one of the best ones I've ever put out. It told you exactly how you got it to dive into these charts and look at them. We've been in like a Darvas box here for the last little bit, and we played in that Darvas box for about 3 weeks. Now, in this concept, you got to figure out some kind of pattern, some kind of trend. A pattern will create a trend, or even knife catches. You could use it as a defensive play. Let's say you have a stock going down, 52-week lows, knife catches, 3 black crows. It's good to learn different chart patterns and strategies, candlesticks. Let me see if I can find what I'm looking for here. Well, I'll just go through the list here. It's good to even look at the candlestick patterns that come into reversals once you find out the trend has been broke. That can give you a leading indicator of getting into the trade. This concept is all about being the first one in the trade. This concept, instead of being the one when you're hollering, you're up at resistance, and everybody else is calling it out, oh, it's getting ready to run, it's getting ready to bounce, it's getting ready to bam, bam. Well, we're talking about stocks that have continued volume. We're talking about stocks that have continuous money flow. We're talking about stocks that have continuous momentum. So we don't need to really do a lot. Tesla, it's always got the volume. It always has a trend. It's volatility. So you got to look for some kind of pattern to begin the trade. And once that pattern is established, and it could be a bull, it could be a bear pattern. It could be 3 white soldiers working on a reversal. It could be 3 black crows working on a reversal. Many say 3 black crows is a bearish pattern. It's far from bearish. It's a bullish indicator to get into the trade. It's just the opposite of what they say. And in trading, you got to think of the opposite. You have a descending pattern here. Well, then moving averages are going to drop below. And when that thing starts to reverse, you're going to have a heck of a bounce up. The trend is bad, but it could be your friend. The trend is always your friend, no matter which direction it's heading. You just got to learn how to work that trend out. So it always starts with a pattern. If it's even a descending pattern like this, coming from an uptrend, you're still going to have that reversal come up, and it's going to end up going back to that resistance level. So get familiar with the patterns. Same thing with this. You have a bullish flag, but it looks like it's in a downtrend. Well, then moving averages are going to drop a little bit, move around under, and I'm going to show you what I mean by dropping and moving up. Same as this right here. You're going to have them moving averages on top, the 9 or the 200 at the bottom. It's going to have a big crash. I'm down here waiting for that other pattern to form to take the trade. So your watch list can be only maintained with 10, 1, 5, 10 stocks, 20 stocks, and you can play the same stocks over and over and over again. But you got to create a good watch list. You got to have a little bit of volatility and a lot of volume and a lot of turnover. You get that good watch list created. I've created one here that I have that just some stocks that are volatile for me to take the trade. If I wanted to, like AMD. I know this sucker's had a huge spike up. Eventually, these moving averages going to start to turn around and go down. So, I'm going to draw me some support lines, and I'm going to be ready for when that thing comes back down here, and that 9's down here at the bottom, and that 21's right here. Instead of in this direction, it's just the opposite. As you see right here, you have the 9, you have the 21, you have the 50, you have the 200. You can take this trade once a week. You can take the same stock and take the same trade once a week. Look, you've got the same position right here. You got the 9, you got the 21, you got the knife coming down. It's a pretty big sell-off from 87 all the way to 95. So that's an $8 spread that you could take the trade. Same thing down here. It was in a downtrend. I was on this thing. I was watching it at $86 when that 9 was already down at the bottom. Not like it was up here with a 9 on top, the 21, the 50, and the 200. It's just the opposite. That's on a momentum trade. I'm telling you, that's screaming to buy. It's telling you. So you had 3 black crows come in here. 3 black crows came in here on this. And let me see. Let me just see if this is what it tells us on the daily. We're going to go to the daily. Right there. See what I'm saying? Your trade, if you use the 200 and you put it on the daily, your signal to buy it was right here. There's your golden cross. So we're using these moving averages. We're using that 200 as a support level to maybe take the trade. You got 3 black crows right here, and you ended up with 3 white soldiers at the end. I didn't take the trade down here because I was skeptical of what happened last time of the earnings. But I heard an analyst, and this is a real smart guy that I like to watch. He said, no, I think this is the time where it's actually going to prove itself. And I've had a $120 target on AMD for a long time. So we're going to take this back to the daily 1 minute. And here goes that dip. They all squeezed together here and you had the big spike. But let's go ahead and go to another trade. We're going to go ahead and look at that Tesla one. Now I'm going to put this on the 20-day. I already know about the chart patterns that we've been set up in this trade here. Now I heard an analyst call it a bear, and if you read the chart right, which he didn't, and he was on CNBC, he called it totally wrong. But you're looking for patterns, and that's what begins the trade. Here you had 3 black crows, and bouncing off that 200. Telling you that's a good indicator to take this trade. Then you had the Darvas-Bach to use as a resistance. So we're going to bring this down to the 20-day. I'm going to show you how easy this trade was. On the first 3 black crows, you had the 9, the 21, the 50, and the 200. So you have that 9 curling up, but you got to break a trend. So I'm going to go back to this and show you what I mean by trend. You take and you draw your trend line. This is on the hour. This is on the 3-day 1 hour. So you kind of draw your trend line down here on the tops of the bodies of the body, and I'm going to make it clear, bodies of the candle. Don't go off the wicks. The wicks is a point of indecisiveness. The bodies is a point of consolidation. That means the buyers and the sellers liked that lower and upper price. They didn't care much for the upper wick or the lower wick. And when that wick's on the bottom, that's a bullish candle. So you draw that trend line. And let's say the stock's just bounced up here in the morning. Pretty nice little breakout. And it finally broke that trend. You draw that trend from the first candlestick to the second. Don't go any farther. Cut it off. Same thing here. You draw it from the first to that second height and extend it on out to the right. That's the trend. That's what's got to break. Finally, it hit a double bottom. Bam. Double bottom. There's your chart pattern to take the trade. Bam. Same thing, same principle. What you do now when you're in this trade and you're at the 9 and you decide to go ahead and take the trade, you cross the trend. The 9 at the same time crossed the 21. There's your go to get into the trade. You want to get in early. The secret is to get in before others recognize the trade. People ain't calling this trade out because they're in fear. You got to break that fear habit. What you got to look for is indicators that will reverse that pattern. So the 9 crosses the 21. You're in the trade, and then the secret to staying in the trade is having the 9 and the 21 cross the 50. I'm going to repeat that again. The 9, after the 9 crosses the 21, your trade's established. After the 9 crosses the 21, your trade's established. After the 9 crosses the 21, your trade's established. So within 20 days, you were able to get in the bottom of this trade at 3 separate times when people were screaming, what are you going to do? What's it going to do next? I'm in the trade now. I just got in the trade. What you going to do next? At resistance. Buy at support, sell at resistance. Follow the trend. Follow the indicators, the leading indicators. The leading indicators is a chart pattern, it's price, and action. Camera, bang, boom. Got to be able to recognize that. So in each one of these scenarios, the 9 and the 21 crosses the 50. Now, if you feel like you really want to stay in the trade, keep following them babies up. And if they bounce and that 50 breaks that 200, you could be in for the long haul, or you can go ahead and take your exit. But the exit up in this trade here was once you hit that top of that Darvas box. And a lot of different during the day. Now this is like a swing trade, okay? You're looking at it as a 2 or 3 day swing trade. Now it's differently when you look at it on a daily 1 minute. I like to run that same pattern and maybe use that 200 as my first resistance. Once the price gets to that 200, I'm out of the trade. I take my profit. I'm happy with it. And that's just on a daily 1 minute time frame. So make sure you have an exit idea. Make sure you got an exit plan before you get into the trade. This is just one scenario. This trade I took here was a triple bottom trade. This was a double bottom trade. And I've had it charted up and ready to go once it broke under 330. And I can show you how you find them resistance and support levels. But it's important to learn that extended trend line method, to know your chart patterns, and to look at them candlesticks. I mean, them candlesticks, they can get you in a trade before anybody else. And the momentum, you've got to be in the now. You've got to get that gut feeling of which way the market is going to follow the trend correctly. I can get it. I can sense it. You got to weed out a lot of stuff. You got to weed out a lot of noise and just let the market and the tape tell you the direction in the news. I only know a few analysts out there that I trust. I only know a few because they're on CNBC. They're better than the bankers. They're better than Goldman Sachs. I mean, I can't stand any of them. I'm a retail trader. I appreciate the retail trader, and that's just the way it is. I don't follow their trades. I follow what the charts tell me. So the next one we're going to look at, what was that? Apple. I had them up here. Now they're gone. Well, we can look at Apple. You know, Apple was an opportunity when we were down here at the triple bottom. On this one right here too. Now this is on a yearly time frame. So if you want to look at it as a swing trade, as a long, you got to look for those main factors that get you in a trade. And I love playing the bottoms. I love playing triple bottoms. I love playing off the 200 SMA. I love playing 52-week lows if they create a good pattern and they start to reverse. I love to play the 6-month pullbacks. We're in a couple trades right now that are pulled back to 6 months. So, you know, here you got a triple bottom on the 200. There's your pattern. There's your pattern. You got the 9, the 21, and the 50. It bounced right off that for support. There's your trade. Sneaky snake. As long as that stock follows that 9, you're still in the trade. See what I'm saying? You're still in the trade. Once you break the 9 and the 21 breaks here, you had the sneaky snake, bam, triple bottom. That's what you got to look for. You've got to have a pattern to get you into the trade. Don't go in blindly. I do it because I'm experienced and I can get in there right in early seconds, like this engulfing candle. I know what that means. I know what 3 black crows mean. I know what triple bottom means. So I'm, you know, and you look at this on a daily. I mean, this could be a 1-minute time frame. You get a higher low. Let's say this is a 1-minute time. There's your pattern right here. Oh, I got that in black. I'm going to change that. I don't know what the hell going on here. But that's your indicator right there. A higher low. Bam. Double bottom. Triple bottom. You see what I'm saying? This is a descending, this is a bullish flag. Check this out. You're looking for indicators. You're looking for a pattern. There's a pattern. You see the pattern? That's a bullish flag with a higher low. Bam, off the 200. So once you establish that pattern, and then you go to the daily 1 minute, you look for that opportunity. The 9, 21, the 50, and the 200. Here's the golden cross. How do I exit something like this? You know, you ask yourself, okay, how am I going to exit a trade like this when you have a bullish breakout? You want to wait for like that triple top. You want to wait for the double top, maybe get out of the trade. Well, once you see this 9, let it establish itself. Let it build the flag that it's wanting to build. Let it build that pattern. You know, let it build that pattern that it's wanting to build. This is a pattern. This is a flag. You know, and once that 9 starts to cross over that 21, that's when it exits the trade. Don't wait until it gets down here and hits the 200. But, you know, in this case, the 200 held pretty good as a support. Now, you know me as a trader. I trade that 1 minute daily. The SMAs are a little different than the EMAs. The SMAs are a slower moving average. The EMAs are a fast moving average. So that's the only reason why I got the 9 on there. But notice we bounced off that again, another triple bottom. Smack. You got the 9, the 21, and the 50 again. Now, you could always use that 50 as a support bar. Once you start looking at this pattern of these moving averages, you'll start understanding them in different time frames. You can use it in the yearly daily, you can use it in the 20-day, 1 hour time frame, or you could use it in the any time frame that suits your strategy. Whatever works best for you in your strategy. So let's say we're looking at the SPY. You want to be able to scalp the SPY all day long. You want to learn how to scalp the SPY? You have the same scenario right here. Right before open, you got the 9, the 21, and the 50 and the 200. Bam, there she goes. You got the exit sign right here. When the 9 comes down, crosses over the 22. The same scenario right here. You could scalp it from the 200, the 9 curled up over the 21, scalp it back to resistance. Same thing here. Scalp it to resistance to the 200. It's all day long. It happens at a different time frame. Let's look at the 20. You got it bouncing off the 200, the 9, crossing the 21. You got the 9 and the 21 crossing the 50. Take it to resistance, double top, you're out. Same thing down here. Big, hard, black, bullish candle, bearish candle. 9, the 21, crossover, bam. This right here, this I want you to pay attention to. We had the 9 cross the 21. She hit the 50, but look right here. You had a lot of volume going into that trade. You get 3 big white soldiers like that, it'll consolidate and keep moving up. A lot of volume going into that trade. Look at here. Held that 9 all the way up there and that 21. Touched the 50 just a couple of times. Use them moving averages. Use them. Take the trade down here and get out at the 200. Whatever flips your boat. But man, you're bullish in this thing. I mean, especially after this. Seeing that right there, I'd stayed in the trade. Woke up the next morning, bam. That's a very bullish indicator right there. So that's what you're looking for. That's how you kind of use that moving average. What was another one? Let's go to the watch list. And then we'll be about done here. Pins. Pins is getting ready, I think, too. We've got that 9 getting ready to kiss that 21 right here. Huge spread. This one is what you call a dead cat bounce. She could move sideways a little bit and start to curl up, and you'd have a nice little bounce back up here to the resistance level, which was that previous low. So that's my exit idea. This is my entry idea. This is going to be part of my next month's case study. Buy at support, consolidate, and sell at resistance. Buy at support, pivot point, sell at resistance. And that's going to be my new trade strategy for next month. But you got the death wish right here. You had the huge knife. It looks to me like we were creating a little head and shoulders. There's your pattern, head and shoulders. I'm talking about you got to wait for that pattern. So let's say you were going to take this trade. Okay? I'm going to erase everything I have on here. I know it's good. I love how I charted it up. But I'm going to erase something. I'm going to show you how to draw the trend, how to think of the reversal that's coming up. So let's say I got a head and shoulders right here. Well, I want to draw 2 trends. I want to draw 2 trend lines. I want to draw one right down here across the head and shoulders. Now, this is called an inverse head and shoulders. It's not like a regular head and shoulders. This is a bullish flag. But it happened so fast, it's going to have to consolidate to the right. But you want to draw a trend line to maybe get you in the trade. You take it from this candle right here, and just draw this on down to that next candle. There's your break right there to get into the trade. But on a swing trade, it's not ready yet, because you got to get this 9 past the 21 before you take the trade. But I'm seeing a bull flag, and I'm seeing that we broke out of that trend. So the next one is going to be like right in here. And you're going to use this as like a support level. You'd extend it to the right, and when it comes down, you'd use it as a support level and see if it broke the resistance level, and this 9 start to curl up. So you would probably want to wait. Once that 9 started to curl up on the hour, you would want to wait and take this trade once it passed this trend line right here. If you could get it past 60, that's when to really take this trade. By that time, that 9 would be curling up. Now this is on a 1 hour time frame. You look at the daily 1 minute, you had a chance to take it on the 1 minute. Run it all the way to the 200. But that's not a big spread. This thing needs to consolidate. I think we're going up on stock myself. We got these stocks, Penn's got overhit. In fact, I know somebody that had a price target on this stock, and she almost hit it. Vegas. She had a $100 target on this thing, and I need to go and tell her we were calling this out at $20. She called it out at 20 and said it's going to 100. I remember that very well. So that's part of it, you know. Following that trend, keeping in the trade. Pens. So let's look at another one here on the watch list. Apple. Apple's getting set up, getting ready again. Take it back. So we've got everything on the top. There's a great trade down here at the 200. Your setup was there. So the trade, if it drops down to like the 50, which is a trend line, a support level, at right around 136 something, that'll be a strong buy. Maybe if it drops down to this support level. Now, I'm going to show you something different on the 20-day 1 minute. You always want to look at them previous highs right here, you know, for a support level. Now on a daily 1 minute, that's a swing trade idea, okay? That's a swing trade idea. When that 9's at the bottom, that's a swing trade idea. That's a swing trade. When the 9's at the bottom, and the 21 and the 50, and it bounces off the 200, there's your trade plan. That's the sneaky snake idea. You got to have that pattern. That pattern's got to form first. Now, for the ones that just showed up, this will be recorded. You can go over it and watch it. I think it's one of the best strategies that for a simple, slow, kind of paced, easy trade that's reliable. And I'm introducing you a little watch list here. Appreciate it if you hit that like button, subscribe, and ring that bell for future videos that I will be pointing out a lot of these trades in. Because next month it's going to be a month-long swing trade lesson, and we're all going to learn together. So the patterns, you know, the patterns is the basic winner to getting into the trade on a swing trade. You got the 9, the 21, and the 50. You know, you can run that up 5 days and hit that 50. I'm telling you, the 200 is solid too. The higher low was a good indicator. This is called an inverse pennant flag. You've got to know your patterns. I want you to sit down, take that little extra time, and only take 10-15 minutes a day and go over just patterns. Do it for a month. Get into a I call it a habit. And it takes 48 times to form a habit. You do it 28 times and the habit is formed. So do that. Study these patterns. I'm going to show you a few things here. I showed you how to play it off the 200. I showed you how to play it off of a pattern. The 9, the 21. Once that's crossed, you got all this bullishness going on. Once you cross the 9 and the 21 cross, we're talking popular stocks. I've been a bull on Apple since it's ever been at 116. Now look what happened when we were down at that area. I called this trade out at that candle. That was an engulfing candle. That was a Head and Shoulders. Inside bar. Inside candle. The body of the next one. Then you start elevating. Sometimes they'll break up. You'll have one here, and then you'll have another one right here, and another one right here, until, runs 3 times in a row. So the engulfing candle is a gift. The sell-off of a popular stock on your portfolio that you have on your watch list is a gift. The consistent 3 black crows on a daily is a gift. Chewy. What a trade on Chewy. Sneaky snake. Let me show you. I've been calling this Darvas box on Chewy. We had the 9. Now this is really an oversold area. People are scared of stocks that are oversold. I don't get it. They'd rather get in a stock that breaks a resistance level. Do you know the odds? Do you actually know the odds? It's a good trade, but you got to read it right. It's a great trade. I'm not going to cut it down because I trade it myself. I trade it up, down, all around, inside out, all about. It's all about whatever the market tells me to trade. But I can trade the 52-week breakouts, but it's got to have a little bit of momentum behind it. It's got to have a lot of money flow in it. I'd rather take that same trade and wait for the sneaky snake to come in and buy it at support and sell it at resistance. Chewy's been bullish for a whole freaking year, man. Look at what it's done in 3 years. All the way from 20 all the way to 120. Beautiful, wonderful run. Now we're creating a flag. We're creating a flag. You can see it. We've got inverse Head and Shoulders that could be working here. This stock it rings next 10 years to be one of the best stocks out there because people love their pets. The scare of COVID, more convenient now that you work from home just to get on the computer and order what you need to have it delivered to you. So it's consolidating after the run is what we're doing here. I love this stock. There you go. You got the sneaky snake. You had it right here. She took off. You had it right here. 9 crosses the 21. The 21 and the 9 cross the 50. And then you get the golden cross coming up soon. It's ready for a break. It's poised for another breakout. We've been consolidating in the Darvas box. Check this out. Do you really want to learn how to read charts? There's your pattern right here. That's your trend. Bouncing off the 50. So, swing trade. Now, you look at it as a daily 1-minute trade. Right at open. Here was your chance. You got the 9 crossing the 50, and she runs up and respects all the way up. Once you hit that 200, there you are. You're totally reversed again. You got the 9 on the bottom, you got the 9 on the top. You have a descending pattern right here. That's a bear flag. You want to wait for it. You want to keep waiting, till you draw your trend line. This here trend line, where'd that come from? I'm going to have to go a little farther back. You come from this higher low right here. I drew a trend line from this to this and extended it all the way out. So it followed trend all the way through. You had many different times to buy this trade on a swing trade. This held as a support line. So this was a great entry for the double bottom on a higher low. I talked about that earlier, right? That's a pattern. That's what you're looking for. So you want to take, when you're swinging this, you want to take and draw this trend line. I know this might be a little fast. Extend that all the way out to the right. And there's your break. Look at that. That's my entry. I'm starting to see that green coming in. This could have been your entry. And you know, in the long run, people don't start screaming about it until it's up here. You're in the trade down here. This is a momentum trade. This is a trade I've been watching for 2 years. I've had it on my watch list for 2 years. I could take this trade and trade it 100 times in a year. I could trade it 50 times in a year. Depends on what time frame you're in. It could be a minute time frame. Run it up to the 200. Sneaky snake. Double bottom, higher low. Same time, same damn pattern. Same damn pattern, same pattern. There it is, the higher low. Sneaky snake, 9, 21 crosses the 50, up to the 200. Bam, you're out of the trade. Same pattern. You got a flag forming here. There's your flag. Bam, she broke out. Same pattern. So the trend is your friend. And learn how to draw these trend lines. You know, here you go right here. All the way down. Once that breaks out of that pattern right there, smack. Same thing right here. Trend. Draw that trend line in there. Once it breaks out of that flag, that's a flag. Look at all these flags. See what I'm saying? A flag starts it. A pattern starts the trend. We're looking at bottom plays and we're getting out at resistance. The same pattern on the bottom, you'll see it on the top. It'll actually turn itself around. You know, a symmetrical flag can be used as a bull or a bear. It depends on which direction it's coming from. If you're at a high, in the sneaky snake trade, sometimes you'll have the breakout and you'll start forming these patterns. And you're still in the trade as long as it respects those moving averages on the way up. Chewy's on the list. Facebook. Here's one that's had a huge bounce. So how would you think about taking the trade? Do you see anything? I really, do you see anything in this thing? Do you see anything? I'm gonna put little circles in here and show you how. You want to make something difficult and turn it real easy. It can become real easy. You look for the trend, you know. You got your triple top right here. You want to be ahead of everybody else. So you took the sneaky snake, you ran it up, and you got a triple top. Does the triple top have to go all the way across tail? Heck no. It can go in any direction. A triple top. So that is a leading indicator to get out of this trade. Then it just all goes to hell, right? So you're out at the triple top and people are getting stuck in the trade. You took a sneaky snake reversal from the 9 to the 21 and dropped it down. And then you waited patiently for the bottom. How would we know if this was a bottom or not? So let's look at the 20-day. Let's see if we can find some kind of indicator that would want to put me in this trade. And I see it. Do you see it? Do you see the indicator that would take me and put me in this trade? Anybody write it down? I'll talk about AMD here in a second. Do you see any indicator in this chart that tells me to take the trade, the pattern? First one to write it down. Come on. Come on. I'm going to go ahead and explain it to you here. I already had a trend line in here. I got this probably from somewhere else. Let me see where I got that from. Oh yeah. See the top of this here? Resistance of the triple top? And the bottom of the box, so I created a little support level. Now, the 200. Chase wins. Chase, you got it right, buddy. You got it right. We'll go back to that 20-day. Or wherever the hell I had it, the daily 1 minute. There we go. Oh, I see what I'm doing wrong. The computer's been acting a little bit different lately. Chase got it right. Well, there's two reasons here, but Chase got it right. The number one reason was we hit the 200. This is on a daily 20-day, 1 hour chart time frame. I use that a lot because that reminds me of the 20-day moving average. So I like to use that. Plus, we've got a pattern. We got two patterns. We have a descending flag. We have a descending flag, and then we have a confirmation that we hit the 200 here. We have the sneaky snake. We have the 9 crossing the 21, which will soon probably cross the 50. So we're going to open this up a little bit. Facebook, see what happens here. So Monday, who's going to be looking at this trade come Monday? You know what we got to break to make it really golden now? Chase, what do we got to break to make this trade golden? Raj, Sue, what do we got to do to make this trade work now? I'm in the trade because we crossed. This is a swing. We have a descending pattern, but if you wanted to really get in the trade right, what do we got to do here? We got to break this trend line. We got to break this trend line. This is a buy signal to me. People came and took profit. You see it hit the 200 right here. It hit the 200 right here. See that? That right there. Then you got the 200 all the way through here. So that's pretty solid support. I think we're going to bounce back up. We got to break the trend line. Exactly, Rich. Once you break that trend line, she'll run right up to 361. Who wants to bet against me? That's a double top. We'll bring it to the bar of that body right there come Monday. So the resistance now, it had to have a pullback. And we're going to look at AMD the same way. So the resistance now becomes at 50 on the hour. Now, if you look at that a daily 1 minute, the same exact trade. Look, you got the 50. You got the knife catch. So when that 9 starts to curl up and break that 21, look, I'm going to draw this trend line. I want you to focus on this. This is what gets you in the trade, man. This is the bread and butter. This is what makes you a novice compared to one that says he is, to one with a big ego. Stay away from them kind of people. Stay away. But look, we draw that trend line to there, to there. You extend it out to the right. We'll make this red, it's easier to see. Actually, let's make it let's really get crazy here. I gotta find a beautiful color. Yeah, I like that one there. Oh yeah. Oh yeah. Oh yeah. Okay, here we go. You see that? We drew that trend line from that top. This is the trend. You want to make it your friend. So you take that first hike up and draw that trend line from there. Now watch, and I've showed this over and over and over again. The 9, the 9 crossing the 21, and your confirmation has been busted. You're in the game early. You see that? You're in the game early. Then you get the confirmation of the 9 and the 21 over the 50. Oh, hell. Now you're in the money. Sometimes I'll pull back, but this is a major confirmation here. And it repeated itself a couple times. But what kept you in the trade was that trend line. Maybe you wanted to take small profit. So run it up to that trend line. Run it up to that next candle. Once she starts breaking below that candle, get out of the trade. But everything here is telling me this thing's, once this crossed, that was a huge hurdle. And then what happens over here? You get the golden cross. And the moving average is moving up over the 200, keeping you in the trade. So that's what we're looking at on Facebook. We've got a pretty good idea that this thing might run back up to that resistance level. AMD. I know people are in AMD and really want to play this. You got to think. You got to really think hard on this one here. This is a bullish stock. So as long as that 9, as long as you stay above the 9 or the 21 on this trade, on the hour, you'll still be in the trade. If it starts to drop below that 21, that's where you might want to exit. Now for the entry, I got to look at it with my experience. I got to look at it a little bit different. You had your sneaky snakes here. Then you had the golden cross as a swing trade. As long as she rides these two moving averages all the way up, you're still golden in the trade. I got a $110 price target on it. I had 105. We broke that. I still like to keep it there at 105 and pull back. I don't want it to run all the way to 120. 110 right now. It needs to consolidate. We've had too big of a run. We've had 3 big huge white soldiers here. Let me pull this up on the daily 1 minute time frame and see if I'm right. I got to look at other indicators to decide if I want to still take this trade or not. So we've had 3 white soldiers here. When I see 3 white soldiers, I'm ready to take a pause and pull this back. I'm going to clear this chart up. I'm going to show you how to chart this sucker up and get ready for the entry. So this is very powerful. It's not going to continue and keep running up like that. It's just not natural. The trade was good to take here at the 200. So you got to look at this a little bit different scenario. I'm going to draw a couple trend lines in here, and I as long as, and you don't get into the trade, as long as it's going up, you don't want to get into the trade. I mean, you want to stay in the trade as long as it's above the 9 on the daily. So you want to draw some trend lines in here, and you draw them on the bodies of these candles. Now I want to see this stock stay in the body of this candle right here. I don't want it to go any lower. So I'm going to put my first support right here. Or at least I'm going to put a support there, and then I'm going to go here to the 20-day. And I'm going to get some kind of idea by moving it. You got a golden cross right here. I mean, you got this chart telling you, it's a bullish trade. Bounce off the 200, and now you got the golden cross. The sneaky snake down here. So we'll take it to the 20-day. She runs there, breaks out, pulls back, breaks out, pulls back. We need to break the double top here at 106.84. If not, she'll pull back to support level. That first support's going to be right here at 105.48. And that second one's going to be right down here. Third one's going to be right here. I'll tell you why. Because of this candle right here and the bodies of these two candles right here. So I'm drawing a trend. And then that. So those are my three support levels. I'm going to put one more right in here because I don't want to leave that thing out. That's pretty solid. You got that body and that body right there. So now we're just going to go take it to the 1 minute. Yeah, I'm happy with that. So bottom line support no lower than 101.69. This is your idea. If this thing pulls back to here, I guarantee it, this 9 will be down at the bottom. This will be down above it, the 50, and the 200 will probably still stay here. So you'll use that as a solid support if it dips down there and you have some kind of drama come in. Just like you did here, just like you did here. Last scenario. But you want it to hold this support level here. It breaks down below there, it could, you could see some damage. You use the 50 also as a support. So if it doesn't break the double top, she's going to pull right back here to 105.44. Keep an eye on it. Set you an alert as you get to the third support. Maybe right in here for a buy. I think it's going to pull back and consolidate. In my experience, we've had too big of a spring up, and it needs to take a sideways track, and it needs to do it off of a solid support. So what was I going to do here? I'm going to create an alert. So I want to make sure I have my alert in here, and I'll tell you what I'm looking for in the trade. What I'm looking for, I'm going to draw a trend line. This is AMD. I'm going to draw a trend line from this candle to the body of that one and extend it to the right. That's the resistance line that we need to break. For it to continue up, it needs to build a foundation above that and get to 110. So at 106.84 is pretty solid to break, and if it does, we're going to shoot up. But from now on, it's bearish as long as it stays under this trend line. It could run up that trend line all the way up to the right. So you want to keep extending that trend line to the right. Right? Right? No, left, right. So my scenario is to try to get in this trade between 101.69 and 103. If I can get into this area on the pullback and your alert's set, I think we can bring her back on up and create that box that I'm looking for. Just through experience, that's how I have to my gut, that's what tells me about the trade. It's going to go to 110, then it's going to need to start correcting and going sideways. But this stock is undervalued. It was undervalued at 2. It's undervalued at 20. It's a remarkable company. Chip shortage. Chips are the thing. So they're working at double, triple time right now. The income's going to be great. Their earnings are excellent. There's nothing wrong with this company at all. We just want to try to buy it on a dip. So we come in here on the morning and we see some kind of reversal of these patterns right here. The 9, on the daily 1 minute, that's when the 200 comes into play. She could bounce off the 200 and retrace back up. Or, the next scenario is just to see these try to reverse and get something like this and take the trade. As long as that sneaky snake comes in, they'll sell off. You're going to have profit takers. So, don't rush in this trade right now. Let it come to you. Let it let it form a pattern. Unless you know how to play volatility. The pattern was here. It was a knife with a higher low. Then you never really had a confirmation of the trend. You remember I told you to draw that trend line. We did have a confirmation of the trend from the knife right here. Early bird always gets his worm. That's me. If you have a little bit more patience and really want to see the breakout, maybe take it on the next pullback. They do it all the time. And when you have a higher low, it's going to be a very strong indicator to take this trade. There's your pattern. You got to have a pattern. You got to have some. You can take it off the trend, but when the pattern's formed, it makes the trade so much easier to take. Just like that. There's your pattern. And there's your sneaky snake. Then you got the crossover over the 50, and then the golden cross. You take it, run it up to the 200, but with this going on right now, you're still bullish in the trade. These moving averages are really strong. I think that's probably it, and I'm going to take a couple questions and see what people are writing in here real fast. But that's the watch list gets you the watch list is very important to take this trade. You can take the same tickers over and over and over again. They just wait for the right opportunity. Be very patient. Put that 9 EMA in there with the SMAs, the 21, the 50, and the 200, and you'll find you so many opportunities it'll slow your trading down. It'll make you a wiser trader because you're showing a little bit more patience. It'll make you more alert to what the trends are. And remember, the chart pattern is the main course that gets you in the trade before you even take it. If the moving averages are set up right, it's a simple trade. Watch it, learn it, give it a month, just test it. Watch your favorite tickers. Don't take tickers that are pump and dumps, low float. Take tickers that are popular, that are talked about all the time, that are in the now. Tickers of your favorite sectors. The EV car, Tesla, Nile. Watch Nile here. Here's your opportunity. I've charted this sucker out too. Big time. You got a head and shoulders right here. There's your pattern. Let me clear this out. The 200. Add that to your arsenal in the daily 1 minute. I can take this one average and make a trade out of it. That's all I need. One line. I can make a trade out of it. I set up a scanner to touch the 200, or I set the scanner to break a 200, or I set the scanner that dropped below the 200. I got a trade set. Sneaky snake. I don't see any respect right here, but man, when that sneaky snake came in, bounced off that 200, look at that. The 9 over the 21 on a swing trade off the 200. Jot that down on paper. 9 over the 21 to the 50 off the 200. The 9 over the 21 crossing the 50. What happens after that? Let's see. Wow. Let's keep going. Pretty nice little run, right? Pretty nice little run right there. XPEV. Oh, I'm going to bring it back. What do I have up there now? I saw something. I bet you it was on the 20-day. There's your little Darvis box there. There's your pattern right there, forming. There's another pattern right here, a little flag. I forgot what I was looking for here, though. I mean, this is just a beautiful play. This goes into my 5-day rule, 5-day sell-off. 1, 2, 3, 4, 5, bam. 1, 2, 3, 4, 5, bam. 1, 2, 3, 4, 5, sell-off. 3 to 5 day rule. Golden Cross. I mean, here you go. Sneaky Snake. Golden Cross. Sneaky Snake. There's 2 trades in 20 days. If you wait for the right pattern. Wait for that turn up. There you know, big spike that day. It'd been a couple dollars. You could have made $50, $60 a contract on that. This one you could have probably done 3 times as well. Same here. Same here. The sell off. If you want to short it, you got the 9 coming down over the 21, crossing the 50, and then the 200. Death Wish. Okay, well, especially when descending triangle pattern is, well, you're right, Rich. Wait for that confirmation. Rich is a smart guy right there. Entered Fridays, short signs. Sava. I'm in Sava. Jim, come on. This chart was streaming to me, and I got in it and got out at a loss, then I got back in it. But this had a huge run, pure momentum, all-timers, all-timers, man. This thing can run. Somebody came in here and smart and shorted it. Well, we got back to, I think, to a very important level on Sava, and I'm going to show you right here what I'm talking about. Thursday and Friday just had a huge sell-off. The interesting, last time we had 3 black crows, we had a big spike. So here we're staring down 2 engulfing candles on a sell-off. What really caught my eye, the final low price on here takes you back to this previous high, which is a resistance level. Now, the smart money is going to think about coming into this trade on this pullback at 65. I didn't notice that until this morning or yesterday. I said, uh-oh. Look what I found. I found some stature here. 6-month resistance to the PP that, now is a solid support. More bullish now than I was last time I mentioned it. So I think we did hit a pretty good little spot on Sava. But had a little pullback right in here. So I called that the support box in the chart. I cleaned it all up. This is pretty nasty right here. You know, this is too much. It's going to go sideways and consolidate. I think a lot of people are seeing that too. Once we hit this double bottom here, it's going to more or less try to pop up back above it. So on the daily 1 minute, when we come in here, and we got this, maybe we have a little sharp pull back to 65 for a double bottom, there's your pattern. That's going to be your pattern. If it doesn't decide to go ahead and break out and move up to the next resistance up here, right around 78.26, that's what I'm going to call a hard resistance right in here, 78.67. If it pulls back to the double bottom, I think that this 9 will be at the bottom and get ready to curl back up and consolidate to the right and make this 78.67 a hard resistance to break. 65 to 78 would be nice for about a week in that channel. And then, you know, she might move up a little bit, but I think it's priced in everything. And now on the dip, and we're just going to gradually build a sideways channel and go up. So keep the sneaky snake in mind when you're trading it tomorrow, like you did here on the rebound. Sava. FWP. Oh, what was that? Pins. That's what I was going to look at. Pins also had a pretty good beat down, and I think we're bullish in it. Had that big old knife. What I'm seeing is another inverse head and shoulders, but it needs to break $60. We got this here 9 kissing the 21, so it's on the verge of to move back up. This is overdone. I think it is priced in now at $60, but there's going to be people stuck in this trade, and it's going to cause it to have a little bit of rhythm up and down. You might be able to take this up to about $2 or $3, but I think we can really tell here on the 5 minute, 5 day. Maybe right up in this little channel right up in here. Between 61.45. 62 something there. But keep that same trade idea and plan when you come in the morning. And if she does dip down, like I said, creates a pattern of some sort, maybe a double bottom and holds, that's how you trade these trades. You don't jump in them here and run them up. You let them form a pattern and then take the trade. That first 15 minutes of the day, you already know what you're doing. You better know what you're doing by that time. And by the hour, within an hour and a half after the bell rings, you better already decide how you've done it. Or you're going to have to probably get into a different scenario and make a new game plan. Because people start pulling back and selling off, and the momentum picks up on trades that are good. Yes, Sue. The answer is yes. Exactly. The 9 EMA, the 2150, and the 200 SMA. You took the trade from 89 to 106? Oh my. That is a good trade. Good job. Really, that's impressive. So do you have any questions you want to ask me about this strategy before I shut this down? You'll just go through your watch list. Twitter's going to be like a good one with a lot of volatility. Twitter will be a good one to trade. Here you are down here. You got a descending pattern right now. And then your support level will probably be no lower than this. right down here on this trend line. Well, we had that previous high and that consolidation right in here. And if she dips on down there, you might be able to take that back up. Or she'll hit this bottom, triple bottom support, 1, 2, 3, and bounce up to the trend up here to the right. Take that trade. Make sure that 9 curls up. See what we're doing here? We've got everything in the proper order. If this 9 decides to break out of the triple bottom, you can run it all back up here, you know, this 78, 80 area. Somewhere in here. Have an exit. See, your entry, your consolidated period, and your exit idea. But there's your pattern. You know, here's your flag here on the daily. Or your trend. Where am I here? Okay. So we kind of broke out of that flag in a way. And there's another one right here. I think this thing ready to go back up, go back to 70, 80. Twitter. If it holds this support right here. Amazon's another good one to trade when it comes to this strategy. She had that huge sell-off. I think she's consolidating. They can't go much lower. I do have a couple supports on this stock. If I didn't clear it out, shoot, did. This 50 would be a good little spot, or this 200. And we're down here right now. So it's going to be that 200 that we bounce off on Amazon. So if it does dip down to that 200, be ready. You take it to the 1 minute daily. If it does hit that 200, and then you look for your sneaky snake trade. That 921 crossing the 50 into the 200, and you're out. Same thing here. The wider the spread, probably the bigger the profit. The tighter the spread, the squeeze. You got a flag right here. It's important that you realize. Wait for it to take its time. Here you got a flag. Then you got the sneaky snake coming in. Bam, runs up. The flag formation. Or take it off the trend. Let's say, you know, the trend's down, she finally breaks, but you're catching it way early. You got the 9, across the 21, you're in the trade. Bam, she runs up above. Breaks at 50, you're in the trade to run it up to here. Depends on the spread, you know, how wide it is. But this has been a pretty good solid sell-off, and I'd probably swing it a month out, or swing it a week out, the contract, or within a week if you got in on Monday. Snap, it's on my list. You know, look at the 20-day 1 hour. There's your idea. Now we've got a descending flag. So, you know, it kind of needs to pull back, I think. For a better buy would be this previous high. Or maybe this 200. So give yourself some time. Create a good long watch list. 10, 15, 20 tickers. And watch them, you know. Change your watch list to the volume highs. Look at the percentage highs. See what's pulled back the most. Maybe that could be an opportunity for your sneaky trade. You see what I'm saying? Tesla, I think, can really start to run. I'm very bullish on that. Pins, Amazon, CCL. Here's another one. I called this down here at 20 bucks. You know, I said, get ready. She run up to the 200. There's your exit. Once it finds that resistance, get out of the trade. 200 is your exit spot on the 20-day 1 hour. FWP, does it fit your falling knife concept? And if you've been watching me, I've been calling these knives, oh yeah, It's getting down there. Forward Pharma, I want to look at the news. I want to see if it had a reaction to any kind of news. FDA nod for Merrick, so that's good news. So there's nothing bad in here. I don't see. It ran higher here on no Pacific News, but it had news previous of that FDA nod. So, you know, they're lying. Nod for Merck Fissel. This is Forward Pharmas. Okay, this is a different company. I got to be in the now. To look at the trade, I got to know what kind of company we're looking at here. So they're calling it a dump, I think. Yeah, that's okay. We like dumps. So what we've done, I'm going to clear this up. This definitely starts to fit in that rule. You see, you got the 9 and the 21 kissing. So on the hour, you want to really wait till you start to see that 9 peak up and break a resistance level. And you got to draw that trend line. You got to, where's that certain resistance that I want to take the trade at if I think the 9 is going to cross that 21. And I'd say it's probably right in here for an early bird special. Somewhere above this candle right in the body of that candle would be my first indicator. Coming in the morning. Then my second one would probably be right up in here for resistance. Now I'm going to pull this back a little bit to the 20-day. I'll look at the yearly. It's about pulled back to that 50 right there. And that's a good solid support. You see this line right in here? So we'll draw right there at 917, that previous high. And then you got this one right down here, and that's where you're going to draw the final scenario of 860. And then maybe take it up to this arrow right here, right there. So this is more than a 50% retracement. It's had a very nice run for, a good period. And then she just pulled back more than 50% on the Fibonacci level. So I think we can bounce off this here. I'm pretty sure we'll bounce off that 50 and hold it as a support level on the daily 1 minute. You see what I'm saying? So you go in here and you look at that time frame of the daily 1 minute. You wait for it to pull back a little bit, see if it holds this 917 and starts to build some kind of push up, some kind of pattern. And I would say if it dipped down here, I'd want it to break back up here at this level right here. This bottom would be like the resistance to break. If you can get, if it dips down to that 917 area and then bounces back to the 934 and decides to go ahead and break up, you'll have the sneaky snake scenario to run it back up to at least 1040 to try to break a resistance level. But I think with a penny trade like this, you got to let it try to form a pattern. Let it form a pattern and then take the trade. Don't rush into it. But it is on watch. It fits in the criteria of the knife pattern to take the trade. You just got to wait for confirmation. Wait for it to build something. Wait for the volume to come in. It's not a trade to take right yet, but it's a trade to look at and let it set itself up. You're welcome, Rich. Neuro. So if we were going to take Neuro, and it's on your list, and we're thinking of the Sneaky Snake. Now, I was just thinking about this stock this morning because of that breakthrough they had. We definitely pulled back to a good standard position for support in this channel that I have. That's called the gap. So I was looking at it as a gap play. The gap would be all the way from $10 to right in here to 1742. So right now you're at a pivot point area in the chart, in that box. You see the gap. This is called a gap play. We're in the gap at the pivot point. So when you pull back into a gap more than 50%, you can start to consolidate or she'll fail. But this would be your pivot point area. And where did I get that from? Where did I get that from? I gotta look here a second. I gotta figure out where I got that from. Oh, pretty simple. Got it from the day low. So that'd be like a double bottom scenario. I think you're in a good spot here to really start to look at it and to watch for the reverse. No lower than 10. 10 has to hold. 1370 is a lot better for having a double bottom and reverse back up to 1742. So that's the channel that you're going to probably be playing it in. You know, when you look at something that's parabolic like this, there's got to be a time where it hit the double top up here and you're going to have that big pullback. It's just natural. But you're in a position now to where I believe you're in the middle of that spot. This pivot point area inside of that gap. So you got three support levels. Your first one's going to be right here at 1370. The second one 1171 and 1003 for a very strong buy. The resistance to break is going to be this 1742. So if it pulls back just a little bit, Neuro, you can take it back up to this trend line, 1523 to 1742. You're going to be playing in that channel. That's my scenario on Neuro. I hope that makes any sense. It's the middle of the gap, so you're at a pivot point. The middle of the gap is a chart. We're saying this is the channel, the gap channel. Inside that channel, you got what you call a pivot point. Then below that, above that, you have a resistance level and you have a support level. The pivot point is a leading indicator on which direction the stock's going to go. So it's either going to go up from here if it hits this bottom, or it's going to drop down to 10. I think that's probably the easiest way to say it. You always got to try to find a pivot point. And the pattern is the gap. So when you come in here on the daily 1 minute, you want to see if that 9's below. If it pulls back, wait for the confirmation, wait for that trend line, and then take the trade. But this is a risky trade, and it's a pump. A lot of people were trading it, and a lot of people are stuck in it. Take that into scenario. Splink, SPLK. SP, did, did, do we all understand the lesson? Do we all understand the concept of the moving average and the chart pattern and the sneaky trade? And are we all going to look at it and set a chart up like this? Are we going to set a chart up like this and practice for 28 days and just watch it? That's what I want you to do. So let me see what Frosty has to say. You're looking at the daily, monthly chart. Let's look at the weekly. The weekly tells me we bounced off the 200 here, right? The weekly tells me we got a head and shoulders here, right? So that's called a head and shoulders. Inverse head and shoulders. The time to take the trade was right in here. I'd almost say off that candlestick on this one here in this case, because that down here just don't look. I would have probably took it, but to be safe. But once she broke past that 200, that was the time to take the trade. Once she gained respect for that 200, that was the time to take the trade. I would have probably took it down here. Once I seen that confirmation going on the sideways pattern and them higher highs, I would have probably took the trade. And this is on SPLK. So we showed respect to the 200 on the weekly, and that's very respectful, right? Frosty? So we're going to go to the yearly daily now. We've got a nice little creation of some kind of flag here. There was a trade to take. You know, on the daily, if you really wanted to take a good swing trade, that would have been it. Once it come up here and then respected that 21, that was the time, boy. That was a beautiful shot. So now, you know, we got to break this resistance here of 144.77. And run it up, at least run it up to the 200. So if she broke this here number right here, 144's, I better get this right. This is a trade you can take in different scenarios. You got to just depend on what kind of trader you are. See, I'm looking at a triple top. I don't know if you saw that, Frosty, or not. I'm looking at a triple top. I'm looking at a flag. Did you see that, Frosty? Did you see that flag? Yeah, let me finish Frosty here. Correct, looking good. I am late, but still have the breakout to play. Head and shoulders breakout to play, yeah. You have the head and shoulders right in here too, kind of. So what we're doing is we're getting ready to squeeze. I'm going to show you what divergence is. Just in case you don't know what it is. That's when the volume starts to sneak on down. You have the formation of the flag, then you have the squeeze. So this thing's getting ready to break out. It depends on market conditions. It's going to go ahead and break out of the triple top and run up here to 154. It's going to run up and hit that 200. So it was a good spot. I mean, this would have been great play for my 3-step trade into next month, I would have definitely wished I'd have been watching this. Run it to that 200. I think you're good. You're good as gold. But there's your triple top break. Doesn't have to be always that way. I mean, the formation of the flag, come in here in the morning, if it does pull back a little bit and that nine's down there, smack, add on to it. But I think this is a real good trade. Could you explain the timing of the confirmation? It says the break in 1 minute, and yeah, I can show you. I can also show you through a recording, but it might take a little long, so I'm going to go ahead and give you that link also. But let's go back to Tesla here. And we'll just do a summary of what we went through. So get your notepads ready. Goodbye. I loved you. I love paintings. In case you don't know, I gave a little speech the other day about painting. I'm a so-called wannabe artist, and I found out this is the first one I started with a series of over 100. And so I started painting a little bit, and I got into that habit of drawing a horizon line in these paintings. And that got me to looking at my charts a little bit more, because I always know there's a little resistance and there's always a little bit of support in these paintings. And I compared it sometimes to artwork. When I'm doing a painting of some sort, or I'm taking a picture. This here was in Jamaica. There's always a horizon line. This guy's got a big old bud he's carrying across. He tried to sell me. Yeah, you always have little support areas where you can stand on, a little pivot point area, and then you got your resistance. So, I gave this. We had a foreign exchange student. I gave him one of my paintings. He didn't speak English very well, but he sure in the hell enjoyed this painting that I gave him. He told me it was the best part of his trip to America. But he's my little brother with another mother. So let's summarize this up. I think a lot of things in life, you can throw them into the way you trade. Try to be happy, live a happy life, and things can go your way, or just little things that, I like to compete, be on top. So that's my competitive advantage. So when you're looking to get into a trade, you got to look for a pattern. We're going to summarize this all up. I was at the 7 Mile Beach and the Grill at the Pineapple Resort. It was one of the best vacations I've ever had, ever. I mean, I got to meet a rock star that used to play with Bob Marley. I got to play in a band there. I gave away a ukulele to one of the locals. I could have took me a babe home if I wanted to. She was all over me. She was from there. I'm going to show you this chick. If I still got a picture of her. I don't think I got it. Here she is. This girl right here, man. I was sitting next to a guy at the bar, and he said, "You see that girl all the way across over there? I bet she comes right to you." And I said, "Nah." So I was sitting there smoking the joint, watching the band, and all of a sudden, here she comes, tapping me on the shoulder. I said, wow. So I spent 2 days with her. She showed me around, and I gave her a couple $100 to kind of be not an escort, but someone that drives you around the island. Told her I wanted to see a coffee farm. But yeah, it was a good time. So we're going to get into the trade here. We always try to look for a pattern. Oh, you're from Montego Bay? Oh, cool. Gangster Airport. The people there are, I've learned one thing about Jamaica that I came back with, I think, a tour guide. Exactly, that's right. I learned one thing about Jamaica that I think you learn no matter what when you go there. And it's a simple word that I use when I trade, and I trade with my mentors and people like you. It's called, and I bet you know what it is, Chase. What's that one word? Respect. They love the word respect. If you treat them with respect, they'll treat you with kindness. And no matter what kind of roots they're from, no matter how ornery they are, if you show a little respect, that can go a long way. And Jamaica is a third world country, and it's cost of living there is high compared to what they make. So anybody in the tourist industry does very well, and they know that. And the people that grow the marijuana there, they do very well because it's legal there. I found that out 2015 when they legalized it. Okay, let's get back into the trade. So you want to look for a pattern. Here was the triple bottom that I found. Here was the black crows that got me in the trade. So I'm looking for a reason to get in the trade. I'm looking for a pattern. Once a pattern has been formed, then I want to know, how do I take the trade? Well, I take the trade when I see a confirmation of a trend broke or a new pattern forming. In this case, I got this on the hour. So I'm looking at it as a swing trade instead of a daily scalp that I might want to continue to trade. It's in a different time frame. Time frames determine what kind of trade you want to make. So, here you got the 3 black crows. If I pull up the daily, 6 months, the same scenario right here. So I'm looking at the daily 1 hour. I'm looking at the yearly daily now. And I realized that this 200 off the 3 black crows is a pretty standard solid support. And I've seen it many times where the bodies of these candles are holding above that 200. So in this one scenario alone, within 20 days, you could have made a ton. I made some money on this one. You could have made a ton of money on these calls. People were calling this trade out at the pivot point or even above the pivot point at the resistance level. We were getting in the trade early on the pattern. So you got to look for them bullish patterns. The confirmation was the 200. Now, the same scenario happened over and over and over again. Now, seeing that the candle on the next day is a leading indicator also how the trade's going to run. Here we got a doji. Inside play. Bam, man, she took off. And this stock, being in the now, last week was being in the now because earnings came out. So being in the now means everything. And I think this is stock to go a lot higher, to hit my resistance level. So what we did, we were in a Darvas box. And and you've got to recognize these patterns. We come from an ascending triangle into a huge breakout, then it's natural to pull back, and to pull back to that 200 was a strong buy. I tried to take away, I tried to subtract a lot of nonsense out of because I'm not the sharpest tool in the shed. You know, it takes time for me to finally figure things out. So I've learned that making it simpler and easier is a lot more attractive to me, instead of being bloated with so much information that it's hard to decipher. So I keep the fundamentals out of the trade, but I always like to be in the now and pick out just a few things that makes me like the trade. So, you know, right now on this stock alone, I'm very bullish on it. I mean, Sue, I wish you were around when I called this down at the bottom. This stock, I mean, ran up so much, and the contracts have gone so high that you have to kind of look out next week, or maybe scalp it Monday into Wednesday. But I think we're going to break 690. So the scenario, like I've said, you got to wait for them patterns, and once that 9 crosses the 21, and then you have the confirmation of the 21, the 9 and the 21 crossing the 50, you're still good for the swing. And that's the same thing as if you looked at it in a 1 minute time frame. You take the same scenario off the 200, the same exact trade. It's just in a different time frame. It's just the moving averages change in different time frames. They're not the same, but the scenario still stays the same. You're bouncing off the 200 and you're running it all the way up until it hits the 200 and fails, then you're out of the trade. Here's your pattern. There's your golden cross to get into the trade. I mean, right there is your golden cross for the continuation. And then the respect that it gains from that 200, that split. Then when she starts to tighten up, you know, there you go. She sells off. But we're going to break, I think we got to get past that 690 and hold that to a support level to keep the trade going. If not, she can pull back to this area right here at 682, where that previous high was, or the previous low. And then maybe that formation of the moving averages will be reversed by that time, and then you can take it on the way back up. But look for them patterns for support levels. You know, this was a flag right here. This is the flag that I've talked about quite a bit. Let me see if I can find it in here. Oh. There it is. This is a bull flag. Chart pattern. Got to recognize a pattern before you take the trade. Don't take the sneaky snake if you don't see a pattern until you get experienced. Don't take the risk. Wait until there's a confirmation. The confirmation is the pattern. You got to have the pattern. You asked me what the confirmation was. It's the pattern or the trend line being broke. That's, for example, let's say there's your pattern. There's the sneaky snake. So what I'm going to do is I'm going to do the trend. I want to do the trend line. I'm going to draw a trend line all the way down here. So I'm going to extend this first hump, and I'm going to take this to the right. There's the sneaky snake. There's the pattern, the knife. There's the trend line. Running it to the higher low and then extending it on down. Now watch carefully here. You've got the 9, the 21, the 50, and the 200. Well, she forms a pattern. Another new pattern is formed. So we go from one pattern to another. The 9 crosses the 21. Kind of, you're consolidating into a pattern. You're consolidating into a flag. This is an inverse descending pattern. Inverse ascending means it's going to opposite way. Then you have the breakout. The confirmation was once you broke that trend line to get back into the trade. Once you broke this, stop it. Once you broke this trend line, time to take the trade. Once you broke this trend line, time to get into the trade. As long as you're forming a pattern, keeps you in the trade. Your support is still down here holding. You're still in the trade. Let's say you got in it down here and it popped up and then it started going down. Don't get shook up. Don't get shook up until it breaks that support line. That's the time to start getting shook up. As long as you're holding that trend, my friend, and you got that pattern going, and you draw that trend line across that chart, that flag, once you break that, it's smooth sailing all the way. You see what I'm saying? Bam, you got the golden cross. That's how you take that trade. You get that trend line and that pattern is the most important part. And then the sneaky snake starts to come in, and then you got it. So I'm going to let you go, man. I've been on here for almost 2 hours. I hope this was some help to you. It's the easiest, it's this. Now, for the ones that are new in here, I've been doing weekly courses live, and you can watch me do these trades. You can watch me call these patterns out. You can see the confirmation for yourself. Hit that like button, subscribe, and ring that bell. Show up. Just watch it for a little bit of time. You know, don't try to push yourself. We're going to figure out the trend. I'm not here to call stocks out. I want to put that disclaimer out there right now. I'm here just to show you a strategy, and I have many. I have many strategies, and I am blessed to hang around some real good people, and I've been blessed to hang around some shitty traders that have taught me a thing or two myself. If it wasn't for the commoners and the beginners, I don't think I'd be here where I am today. I give all my credit. I give all of it, 99% of my credit, to the ones that are asking the questions. The ones that ask the questions has made me look harder and stronger and look things up and understand them better. It's not the ones that are at the top and try to scream out a certain strategy and then pop that I'm the best that there ever will be, and you got to follow me, and it's all about me. And I'm not about me. I'm about sharing my strategy and just showing you how easy trading can be. And many try to make it too difficult. 95% of the traders out there go in blindly. Maybe 1 to 5% know what they're doing when it comes to retail traders. So make sure you got the right people you hang around. It don't matter to me. I usually weed out the ones that give me a hard time. I don't have time for that. They're gone. They're history. Usually people that are mad at me are people that can't see what I see, or are mad because I had left a room and went somewhere else to someone else's room, and they got jealous or envious, calling me a traitor. You know, the room that I am associated with now and have left is I Love Stocks, and I love them very much. They're a great team. They're great people. You know, but I'm going to start a new path. I'm going to look forward. I'm going to switch things around. And I want to get back to my basics when it comes to just showing people my style of trading. But I find a lot of respect. I think when we were talking about respect, I think you need that in this world, because there's a lot of disrespect on the internet. People that don't know you and they talk smack, just weed them out. But that's the sneaky snake strategy, and I've spent two good hours with you today. And subscribe, ring that bell. I hope I get a few more followers out of this. I want to get to 1,000 before I'd make another decision on what I want to do. I want to bring it total streaming instead of delay on YouTube. But I want to use YouTube too to show videos and gather, new followers. It's a pretty good little outlet. And I'm going to take some time off and do a little vacation and kind of relax until the end of the year, and then I'll start something new, maybe a new room, but I want to make it a learning club, not a call center. And I think that's about it. Oh, I want to run a video of my next strategy for next month, if you don't mind. Then we'll just go ahead and call it quits. Last week's lesson was watch list. The one before that, the VWAP, chart patterns, knife catches, and the moving averages. I also created a watch list, starting a watch list on the pot sector. I got a pretty good little bounce off that. This is going to be the case study, the next 3 steps for the next 3 months.
Retail traders, I want to
you watch this, I'd appreciate it.
Trading strategy for next month and swing trading, and I'm going to use Tesla as an example. I really like Tesla. I've been trading it for a very long time. Rinse and repeat for me at these levels when they're creating what I call chart patterns. So part of the next month's lesson, I'm going to do a case study all month, and I'm going to try to break the chart patterns down into 3 different steps. They're going to be 1, 2, and 3, and I'll bring that to our attention a little bit later. For right now, we're going to talk about Tesla. Tesla, there's 3 bears that I worry about with Tesla. I'm going to pull up the chart right now. 2 of them is China and the chips. And then the third one, which is probably the most important one, besides China, they'll go in probably the order of social media, China, and chips. Social media has always been dogging Tesla for the longest period of time. A lot of the fat cats are fundamental traders. They don't understand the technical side of what Tesla is all about. So I'm still a very big bull on this stock, and we are showing 2 bull patterns. One of them was an ascending triangle that we started from the bottom here. That's step 1. The second channel is the Darvas box. That's step 2. Anything below that support level of 331, you could get a little bitty sell-off or a correction. I've got a strong buy, just above 604, but it's been holding at 626. So anything under 331, that's when you want to start to get interested in the trade. Step 2 is the Darvas box. I've been calling out the Darvas box for the last month and a half, 2 months. Every time we hit 3 black crows, it's time to buy the trade. We pulled back to it the other day. I called the bottom on the triple bottom. We had the triple bottom on the 3 black crows right here. 1, 2, 3. Called the trade out with sneaky snake run, and she went ahead and broke on out. The next tier is the resistance channel.
So what I'm seeing is a bull flag consolidating, waiting to either go back to the support level that it started with, or to break the resistance of that Darvas box and try to get up to the highs of 745. So the steps that I'm taking now for next month's lesson are going to be trying to look and locate longer swing trades that I can hold more than 3 months at a time, maybe longer. So I'm going to be buying at support, consolidating at the pivot point area, and selling at resistance. It'll be the 1, 2, 3-step program. So I wish everybody a great day, keeping a good eye on Tesla. I think we're ready here maybe next week. I thought this week was a good week to understand that it held support very well in that Darvas box, and that was very important. If we do get down to another triple bottom and make a quad bottom, we might get down a little bit below the ascending triangle. So keep a good watch on it. I watch it every day. We're going to open up here in about 25 minutes. And retail traders, keep working on it. Keep working on it and focus. Don't ever stop. Maybe pull back sometimes and you'll get there. Have a great day. All right. Well, that sums it up. I hope you all have a great weekend and see y'all in the morning. I think we're going to be good. I got over the SPY. I think we're going to be good. Just let the market dictate by the first hour and a half. You better know where you are. Start doing some homework, looking for opportunities. And then, I'll talk about that some other time, about scheduling of the day, how the time frame works. But that's going to be next month's lesson, and I think I'll be reviewing a lot of what we've learned in the past 5 weeks on the knife catches are still in play. I want to really get you to learn how to play them. And Rich, thank you very much. Tom, thanks, buddy. I hope you subscribed. And this is a learning experience, and I'm just going to share what I have so much stuff to share. And I got so many different charts. But I think my vision is seeing a little bit bigger picture. I want you to see the painting. I want you to see the rolling hills. I don't want you to get stuck in a certain ray where you think you can take something and run it up. I want you to visualize the what's on the canvas and how the roadmap, how these highways can generate up through and down through the mountains. I try to tell people, I played basketball, I played baseball, and I boxed, but I know that gravity has a lot to do with even day trading science. Gravity, sometimes, man, it hits gravity. It's going to bounce on down, and every time it hits the floor, it's going to bounce up higher just a little bit more. And that's the same, it's just natural. You got the big bounce, and then she hits the floor and bounces on down. It bounces on down, the gravity just kind of sinks. Big bounce, and she bounces on down. Big engulfing bounce, and she bounces on down. I think that's what the principle I'm trying to get, that everything doesn't run to the moon, that you got to find a place at one time where the resistance is going to hit, and it's going to get hard. It's going to get hit hard, and then you just look for the exit sign and get out and be happy with what you got, and be a little patient and let them come to you and form a pattern, some triple bottom, something that says, and study them patterns. You know, what you do is you get on here and you go to Google or whatever search engine you have, and you type in patterns, chart patterns, and then you get these images, and you can just go and look at all the different kind of patterns. Try to find a good page that tells you the bullish and the bearish patterns. For example, something like this, and stick it up in front of you. And then when you start seeing these form, see how they react. And many times they react 90% right time. You know, you got a difference between a pennant flag and a wedge. Ascending triangle. A symmetrical flag can go either way. Bull flag, bear flag. You'd think that would be a bull flag. There's your bull flag right there. You know, the double top, the head and shoulders, the upward wedge, the triple bottom, the downward wedge, reversal play. I love this play. Many think it's going to go down and sink. No. Learn them patterns. And then to really enhance the sneaky snake trade, that's going to get you in the trade. I mean, that's going to get you prepared to get into the trade. This will prepare you to take the trade. This is what's going to prepare you to take the trade. How the formations of the candles start to read. You know, bullish, bearish, bullish, harmony, bullish. You know, dark cloud. Learn these little 2 candle series. Learn what they've got to say. Here's a nice little setup right here. Bullish candlestick patterns, neutral, and then bearish. Study these, and that could get you even in trade even before the moving averages start to turn. Or as you see them turn, you could be watching 2 candles. Now that you know, that's where I am. I'm at the level to where I'm in the trade on 1 candle, but I think that's a little too advanced. I find myself sometimes way advanced, and I have to kind of tone it down a little bit to hang around with certain people, because I see things that they don't see, and I hate to always have to sit there and say, no, it's going to do this, and then end up doing that, but it does make people look. And I've charted over 1.2 million charts, I think, in my lifetime. So study them candles. Some of you have families, so you got to develop a strategy that works for that, you know. Some of you have families, and some of you have jobs and hobbies that you like. If you only want to do, I can do this for an hour and a half and I'm gone every day. But I just got my COVID shot. And I got shot over here, and now both of my shoulders are sore. So everything else is okay. I got to get my other shot in a couple weeks. So I'm preparing to do some traveling. So I'm going to get out of here. Mr. Happy, thank you. Subscribe. I could keep talking and talking and talking, but I like to save some of that for in the week time. I really think this is a good little challenge for you to learn the habit. And I gave you a lot of good pointers today. And I'm going to go ahead and get on out of here because it's a non-stop situation. Thanks a lot again. Let Vegas know I said hi. And I'm out of here.